Welcome, everybody, and thank you for joining us today. My name is Sean Moss with Down Payment Resource. We also have with us Fern White, who oversees customer success with our partners. And we have Melinda Harris, our Director of Marketing. We want to keep this interactive today, so please share your insights and questions and successes with down payment assistance programs, partnership ideas, creative marketing endeavors that you've seen success with. We'd love to share some of those stories. We'd love to answer any and all of your questions as we can. We're definitely going to leave time at the end for Q&A today, but we're also very excited to keep this interactive, present some of this content, and we want to thank the New York State Association of Realtors and their staff for allowing us and working with us to put this on today. We want to cover the basics of down payment programs. What are down payment assistance programs, their common features, some differences you may see among these programs. We'll give you a little insight into what the opportunity with these programs looks like in New York. And we're going to break down the three most common types and talk about commonalities and differences and opportunities for you. So with that, again, my name is Sean Moss, and I oversee operations and customer support, primarily overseeing the collection and maintenance of our database of all of the homebuyer programs across the country, including across the state of New York. We as a company are a national database of about 2,300 homeownership programs across the country. We integrate with MLSs, we partner with associations of realtors, as is the case with the New York State Association. They've been a partner of ours for a couple of years now. And our goal is to help agents be the down payment hero to buyers, and in doing so, raise awareness of down payment solutions for those buyers. Ultimately, we want to help you connect home buyers to the down payment help they need. There are tons of opportunities out there. We're going to get a glimpse of that, and we're going to talk about what these programs look like to hopefully enable you to come away from this webinar today with a broad, basic, but useful and valuable understanding of down payment assistance, its role, its characteristics, the wide variety of down payment assistance opportunities out there, and to send you off with confidence to not only bring up these opportunities with your potential clients, but also to strike partnerships with loan officers and others that can help you execute on a first-time homebuyer strategy. So when we talk about down payment assistance or home ownership programs, let's just define that up front. What does that mean? We are talking about loans, grants, tax credits, and other programs for eligible home buyers that can help them do a couple of important things. Achieve the down payment faster by overcoming the down payment hurdle, cover closing costs in some cases, and ultimately explore home ownership and get into a home sooner than they would have thought they could or sooner than they would have otherwise. So with that in mind, let's look at the nature of home buyer assistance kind of nationwide first, and then we'll sort of break it down from there. So nationwide, of all the programs we track across the country, about 78% of those are down payment or closing cost assistance. Now, on the right side, we're going to look at mortgage credit certificates today. Those are tax credits. That makes up about 5 or 6% of all the programs out there. There's not a mortgage credit certificate in New York, but for some of you that work in border markets, maybe if you're also doing some business in Pennsylvania or Vermont, there are tax credits there. But we're going to look at those anyway, just so you know what they are. We're also going to look at affordable first mortgage loans, which are about 6% of the database, or 6% of all homebuyer programs out there. And those typically come from state or local housing finance agencies. So Sony Mae, for example, in New York, that's your state housing finance agency. There are some other types of homebuyer assistance that we're not going to cover today that cover about 11% of what's out there. But the vast majority of homeownership assistance programs provide down payment or closing cost at the closing. That's about 78% of all the homebuyer programs that are out there. Now, about 2/3 of those offer deferred payments. Almost half are forgivable, meaning the debt is forgiven over time or at some point in time. And about 40% of all these programs have both deferred payments, meaning no monthly payment, and they are in some portion forgivable. Now, those are the loans, right? The down payment assistance loans. Now, some of these programs are grants as well. So you've got second mortgages and grants, and then you can break down second mortgages a number of ways. And we'll kind of look at some of those features as we go here. But wanted to give you some perspective. When we say there are 2,300 home buyer programs across the country, and we're going to see there's almost 100 just in New York alone. Almost 80% of those are down payment and closing cost help. But there are some really cool, really opportunistic, affordable first mortgage programs out there from some of these down payment assistance providers. And in some markets, there are mortgage credit certificates or tax credits. And those essentially are the three most common types of homebuyer assistance programs. And those are the three we're going to break down today. Now, before we do that, we just want to be clear that down payment assistance is available everywhere. Every state in the country has at least one state housing finance agency or similar entity. They offer programs statewide. Metro markets all over the country and all over the state of New York also have local nonprofits, community development financial institutions, land trusts, municipalities, cities and counties get money for down payment assistance programs as well. So there really is there is no market that doesn't have some form of down payment assistance available. And in many markets, you will see a diverse array of programs and opportunities because you've got the state, the counties, the cities, the nonprofits all offering down payment assistance options. Now, I've kind of hinted or touched on most of the entities that offer these programs. On the left here, you've got your state housing finance agency. Again, in New York, that's Sony Mae. You've got local housing finance agencies in some markets. You've also got cities and counties, often that get money from HUD. You've got employers in some markets that will offer some sort of down payment or closing cost program as a recruiting or a retention effort. And you've got nonprofits, you've got the Federal Home Loan Bank, you've got community development financial institutions and land trusts and housing authorities and more. That's where these programs come from. Now, already you're probably saying, well, that's a lot. How in the world do I keep track of all this? That's what we do. And that's what our partnership with the New York State Association of Realtors does for you. We are already tracking and monitoring all of these programs, and we're making that information available to you through our partnership. And that's in part what we're going to show you today is how you have easy, simple access through NYSAR's website to search anywhere across the state of New York and find these programs. And we'll give you a couple other resources too. But before we break down the three most common types of homebuyer assistance, we want to address the universal trend among down payment assistance programs. In New York, there are about 90 homebuyer programs just in your state, and they're not all in New York City. They're in Buffalo, Syracuse, Rochester. They're all over the place, right? You've got state programs, you've got local market programs, you've got nonprofits, you've got regional nonprofits, Federal Home Loan Bank. There are all kinds of opportunities. We're going to show you how to quickly find out what's available where you do business or where your client or clients are looking to purchase. But we also want to be clear, down payment assistance programs have not gone away. That misperception has lingered for the last year or so. We heard a lot middle to end of last year of realtors and loan officers saying that down payment assistance programs were gone, that the money had dried up, that there was no support for them. Those are not true. So we're just going to be candid. Down payment assistance programs are alive and well. They are not going anywhere. And in fact, look at the current administration, policies out of DC. We're seeing a lot of attention on affordability issues when it comes to housing. We're seeing a lot of attention on fair housing. We're seeing a lot of attention on homeownership gaps among minorities. We're also seeing a lot of attention on down payment assistance specifically. So contrary to some of the misperceptions that have been out there for the last many months or a year or so, down payment assistance programs are alive and well. There's going to be more and more attention on them going forward. And in fact, state housing finance agencies last year across the country saw record volume helped by record low interest rates to the tune of billions or tens of billions in purchase business using down payment assistance in 2020. And we expect, as do housing finance agencies, to see that trend continue throughout this year and certainly over the next few years. So, with that, a few other things. Local city and county programs are still widely available. We are still seeing new programs added, including in New York, just in the last few months or 2 or 3 quarters. So, new down payment programs are still coming about. Homebuyer education courses are being offered online, which, in the midst of COVID has kept these programs operational because many of them have a homebuyer education course requirement for the buyer. So, all of that is to say, down payment assistance is strong. The demand is strong. Volume is being done at record levels with down payment assistance programs. And in New York, there are about 90 homebuyer assistance programs right now across just your state. So let's look quickly at some universal requirements of these programs, and then we'll break down the DPA versus the affordable mortgage versus the tax credit. So universally, these are not for investment properties. These are not for rental properties. These are not for second homes or vacation homes. These programs are meant to be used with or for the purchase of owner-occupant primary residences. These are also being used by buyers who have to qualify for a first mortgage and typically require some minimum buyer investment. They all, as I just mentioned, also typically require that the buyer go through some sort of homebuyer education course. And again, our tools show you all of this information. So, this is going to sound like a lot, maybe if you're new to DPAs, but part of the reason that the New York State Association and us wanted to get together today was to show you how easy it is to uncover all of this. And I'm actually going to do that live on your NYSAR website, showing you some of your member benefits, specifically the down payment resource tools that you have. I also want to address a common myth or misperception here, not among us, but among consumers, prospective homebuyers. There are a lot of misperceptions about down payment requirements. Specifically, there are a lot of potential buyers, first-time homebuyers, that think they need 20% down to purchase a home. We all know that that's flat out false, but we have to make sure that we are addressing that with consumers who believe that to be true, for whom that perception is reality. So with all of that, the purpose today was to look at the three most common types of homebuyer programs. We've already identified those: the down payment assistance or DPA program, affordable first mortgage products, and mortgage credit certificates, which are tax credits. So I'm going to dive in here, and we're going to spend a little bit more time on the down payment assistance program because, as we saw earlier, that is by far the most common type of homebuyer assistance that's out there. And so I want to make sure we cover a lot of the detail and nuance so that we can all confidently walk away from this event today and be prepared and excited about discussing these with potential homebuyers. So let's look at the most common type of homeownership program: down payment assistance. These programs are often nonprofit or government funded, sometimes from employers. They can offer from several thousand to even tens of thousands of dollars. You will see more money in higher cost markets from these programs. You'll also see higher income and purchase price limits in higher cost markets. We'll get to that in a moment. But if we separate down payment assistance programs first into two broad categories, there are grants, which are true gifts at closing, and there are second mortgages, second loans. So if the down payment assistance is not a grant, then there's some sort of second mortgage. Those can be repayable, meaning you start paying on the second when you close the loan, or there is a payment tied to that down payment assistance, a monthly payment along with the first mortgage. Many of them have deferred payments, or they are silent seconds. That means there is a second mortgage or a second loan for that down payment assistance amount, but there's no monthly payment on it for some period or for the duration of the first mortgage. That would be common as well. And as we saw earlier, many of those second mortgages are also forgivable, meaning that at some point in the future or over some period of time, that down payment assistance loan is forgiven and effectively becomes a grant after a certain period of time. So, without digging into further details, the main point here is to say that down payment assistance is actually a pretty broad category. If you see DPA or somebody talking about down payment assistance, that's not one thing. It can mean any number of things, and you're seeing some of that come to light here. There are a number of different repayment terms and characteristics of these programs. However, let's look at some of these in a little more detail. So, what can these funds be used for? Obviously, down payment, obviously, closing costs in many cases, sometimes prepaid expenses. Some of these programs, a smaller few of them though, can be used for property repairs or rehabilitation. A lot of them will address, gap financing or principal reductions, which is essentially a larger down payment, but bridging the gap between what a buyer can afford and what the property is valued at. In terms of first-time home buyers, there's also a common myth or misperception out there that these down payment assistance programs are only for first-time home buyers. That is not the case. In fact, about 40% of all of the home buyer programs across the country do not have a first-time buyer requirement. That's part one. Now, the other part of dispelling this myth is understanding the definition used by down payment providers as or of a first-time homebuyer, which is simply the 3-year rule. A, a, a prospective buyer is a first-time homebuyer if they have not owned a home in the last 3 years. Now, the language is a little longer depending on if you're looking at HUD's definition or somebody else, but basically it all comes back to the 3-year rule. If you haven't owned a home in the last 3 years, you are a first-time home buyer. So even if you owned a home and sold it 5 years ago, it wouldn't matter anyway that you had previously owned because it's been more than 3 years. All of that to say, not only are there many programs that will allow current or recent owners to use their down payment assistance program, but just about all of them also adhere to the 3-year rule, where you are a first-time home buyer anyways if you owned more than 3 years ago or never before. Down payment terms. So we talked about grant, we talked about forgivability. A down payment assistance loan may be forgiven over time. We talked about the fact that some of them have deferred payments, meaning you don't have a monthly payment on a lot of these programs for the down payment portion. So you just pay the mortgage and you get the down payment assistance with no payment. Sometimes that's paid back at closing. Sometimes it's forgivable. Paid back at sale, or if you refinance or something down the road. Sometimes you'll hear the term affordability period. Over what point are the payments deferred, or for how long do you have to remain in the home in order to see that down payment assistance funds get forgiven? Now, I've said second loan, second mortgage, subordinate loan. These are all sort of interchangeable terms. The big point there is if the down payment assistance is not in the form of a grant, a true gift at closing, then there is a second lien and a subordinate loan. And those come, as we saw, as either repayable or deferred or forgivable loans. There are some programs out there that have a shared equity feature. It's not quite that common. It may become more common in the future. We'll see. So I won't get into too much detail about that, but those are some terms you may hear. And likewise, DAP or DPA or silent second or soft second. They're all ways of describing down payment assistance, but they're all also unique in their own right. Now, as far as eligibility, what are the eligibility requirements for down payment assistance programs? These will vary by program. However, most of them have income limits. Those income limits can be anywhere from 80% of the area median income to 100, 120, 140, sometimes up to close to 200% of the area median income. So that isn't low income, just so we're clear about that. That is the area median or average income. So we're talking about, a much wider pool of potential buyers than a lot of people often realize or appreciate. And we're not talking about these programs that are just for low income households. There are certainly some stigmas sometimes attached to these programs, but we want to be clear. Many of them have income limits that far exceed the area median or average incomes, expanding the pool of potential buyers that could tap into or leverage these down payment assistance options. Likewise, most of these programs have maximum purchase price limits. Those are also market adjusted. Think about HUD loan limits or conventional conforming loan limits. They're always, for the most part, market adjusted for higher cost markets. Likewise, these purchase price limits for down payment programs are also typically market adjusted. So they are going to be higher in some parts of New York than others. Some parts of New York, they'll be higher than in other states, but they're typically market adjusted, and they could be anywhere from 2 to 4 to 6 to $800,000. It really does depend on the market. And quite frankly, in New York, you have some very diverse price bands across the state, more so than sometimes in other states. Location makes a big difference. Your state housing finance agency offers their programs statewide. However, a city or a county, they're going to get funds from HUD or from wherever, but their program is going to be limited to their city limits or their county limits. Nonprofits may operate locally or regionally, so their boundaries or the geographic area within which their program is available, that may vary from one nonprofit to another depending on their core services and their core service area. Nonetheless, the important point to note here is that location makes a big difference, and part of what our tools and our partnership with the New York State Association of Realtors will help do is clarify which programs are available as you cross city boundaries, county boundaries, move to a different market in the state and look for programs there. You're going to see a different mix of programs based on location. And you're going to see all of those opportunities layered into the list of available options or solutions for your clients as you're using our tool to figure out what's out there. There are also credit requirements. Not only do a lot of these programs have a minimum credit score of their own, now, of course, you have to qualify for the mortgage, right? You got to get a first mortgage, the purchase mortgage. But some of these down payment assistance programs will have a minimum FICO or credit score requirement. They'll also, some of them have credit guidelines, but for the most part, they're in line with your standard FHA or conventional mortgage. So you're already getting a mortgage. You're essentially replicating much of that application to apply for down payment assistance from these providers as well. The minimum FICO typically is going to be 620 to 640. Below that, you're not going to see a lot of down payment assistance available, but that's still a very wide range of prospective buyers. Home ownership history, that's tied to that first time home buyer requirement. Many programs do not stipulate that you have to be a first time home buyer. They don't care. They're opening their program to a wider audience of inclusive of current owners or even recent owners. However, if there is a first-time homebuyer requirement, that has to be accounted for. Many programs will offer unique incentives. For example, waiving the first-time homebuyer requirement, if it exists, for those with military service. There are also in some markets at some times unique programs only for those with military service in their background. And profession can make a difference. We're actually going to look at this in a little more detail, military service and profession. So I won't harp on that right now. We'll come back to that. But what are some of the advantages of down payment assistance? I think this is where a lot of the value that a down payment assistance program can provide is swept under the rug or overlooked or underappreciated. We all know that down payment assistance provides a bigger down payment. But think of the compounding benefits that accrue because of that. You lower the LTV. As you lower LTV, you open up potentially better interest rates, better mortgage products, and better mortgage insurance costs or pricing. Case in point, what if you were going to go FHA with 3.5% down, you pay the upfront mortgage insurance, you absorb the life of loan monthly mortgage insurance at a high rate, But what if you could get that extra 1.5% and get to 5% down with a down payment assistance program? Suddenly you can get a conventional mortgage, no upfront mortgage insurance, lower monthly mortgage insurance. That's going to lower your debt to income ratios because you're going to lower your monthly payments. You potentially get a better interest rate, further lowering monthly payments, further addressing qualifying ratios or debt to income ratios. All of this also, now that's all kind of the monthly payment perspective, right? Qualifying for the mortgage from a payment perspective. What about cash to close and savings and liquidity? When you have access as a home buyer to down payment and closing cost help, you don't necessarily have to tap into your own liquid savings and deplete them potentially just to get into the home. Instead, you can retain your savings, you can maintain more liquidity, you're better prepared for the immediate and ongoing costs of home ownership, the obligations you now have without a landlord, and all of that together can increase the purchasing power of the same income by compounding those benefits just from using a down payment assistance program. So those are some of the advantages to kind of dig past just, oh, the down payment was bigger. Yes, that's true. That's great. But consider all of the repercussions downstream of increasing that down payment, potentially improving mortgage insurance pricing, first mortgage options, interest rate, retaining your cash, maintaining liquidity, and increasing your purchasing power, all with the same income you started with, right? And then lastly, homebuyer education. This is important to us. We are big believers in the value of the homebuyer education courses that are often required to qualify for down payment assistance programs. The content is not just there to prepare buyers, but it is there to ensure successful home owners long term. There have been a number of reputable studies that have quantified the impact of homebuyer education on decreasing mortgage delinquency down the road. The content is HUD certified. These courses are available online. They have been for many years. We saw a lot more online homebuyer education last year because a lot of down payment assistance program providers had to move what would otherwise have been in-person classes online in order to keep their programs running. So that's a pretty big or pretty comprehensive overview of the basics of down payment assistance programs. But I also want to dig into affordable first mortgage options because that's an important product opportunity or solution to affordability that's often coupled with down payment assistance programs. And it's also the second most common type of homebuyer assistance that's out there. Now, these programs typically come from your state or local housing finance agency. They often offer reduced interest rates. That can be one of the main benefits of some of these first mortgage products and programs. It also expands the first mortgage options available to a potential buyer, namely because housing finance agencies, they have arrangements with, for example, Fannie Mae and Freddie Mac to offer HFA Advantage and HFA Preferred mortgages. These are additional mortgage options only available through housing finance agencies that can offer mortgage insurance benefits like reduced mortgage insurance costs. All of these programs can be combined often with one or more or many down payment assistance options. And then if you combine that sometimes with the tax benefit of a mortgage credit certificate, you can accrue even more long-term value to those buyers. What are some of the advantages of these affordable first mortgage programs? First of all, reducing buying costs. Just like the down payment assistance increases the down payment and lowers the mortgage amount with a reduced interest rate or with improved mortgage insurance pricing, you can also reduce the buying costs by using one of these first mortgage products. This can all lower the payments, all increases the purchasing power. And when you look at all this together, we're talking about expediting home ownership for people that may not have realized how close they were, or maybe were on the cusp of home ownership. And with a little education, they could get pre-qualified, solve for down payment and start considering home ownership seriously. Now, the third most common type of homebuyer assistance program is the mortgage credit certificate. Now, this is a standard part of our breakdown of the most common types of homebuyer assistance, but I do have to disclaim there are currently no mortgage credit certificates available in New York, in the state of New York. However, if for those of you that are maybe in some border markets bordering other states, I think I mentioned earlier, Pennsylvania, Vermont, for example, they have mortgage credit certificates. So for some of you that may be relevant. For all of you, I'll go ahead and explain a mortgage credit certificate here, but I won't spend too much time on this. This is a tax credit. So it's not at closing down payment assistance, but it's also not a tax deduction. We're all probably familiar with the mortgage interest deduction. And we've all seen some significant changes to that based on standard deductions and other tax policies in the last few years. The benefit of a mortgage credit certificate is that it is an annual life of loan federal income tax credit. So it accounts for the mortgage interest you paid, allows you to claim a portion of that as a tax credit, which is a dollar for dollar reduction of your tax bill. And then you still get to deduct remaining or mortgage interest paid. The deduction is a reduction of your taxable income, right? Whereas a tax credit is a reduction of your tax bill itself. So tax credits are always preferred when available. The mortgage interest deduction remains available even with an MCC for the portion that you can't claim as a tax credit. What does this do? It reduces your income tax liability. It increases your qualifying income in some cases, because some mortgage credit certificate providers will allow you to take that annual credit and apply that back to qualifying income because they know you're going to get that tax credit at the end of the year. And then some mortgage credit certificate providers will let you reissue that certificate through a refinance, which is a huge benefit to carry that over through a refinance and continue to leverage that credit as you pay mortgage interest throughout the years. So very quickly, how does this work? You can tell this example is somewhat dated because we use a 4% interest rate. However, to keep the math simple, imagine a $200,000 home price. You close on January 1, you make 12 payments that year at 4% interest. That's $8,000 in interest paid. Now, the mortgage credit certificate may allow you to take anywhere from 10 to 30% of that interest as a tax credit. Let's assume 25% of that interest you paid is allowed to be claimed as a tax credit. That is a $2,000 tax credit. But what happens to the other $6,000 you paid in mortgage interest? You still get to claim that as your part of your mortgage interest deduction if you itemize. I'll leave it at that for now without getting into tax policy. That's not our role here, but we are big proponents of MCCs where they are available. Check them out if you are doing business in a market where there is one available, and you can use our tools to figure that out. Now, let's look at some additional unique features or benefits or nuances of some of these programs. So we broke down the three most common types of homebuyer assistance, but there are some other things to consider. For example, targeted areas. There are some program providers that offer unique incentives or benefits in targeted areas. Those target areas are identified as high foreclosure, in need of community investment. For a number of reasons, a particular geography may be targeted. Those could be census tracts, zip codes, entire cities, even entire counties. Some of the benefits you may see in those targeted areas are a down payment assistance program might waive an otherwise required first-time homebuyer requirement. So maybe anywhere else in the market, you have to be a first-time homebuyer. But in those targeted areas, we would commonly see that requirement waived, opening the door for recent or current owners to utilize that down payment assistance program. Sometimes we see more down payment assistance money from a program if you buy in a targeted area. We also commonly see higher income limits and higher purchase price limits in targeted areas than elsewhere. But remember, they are unique to specific locations, typically census tracts, zip codes, cities, or sometimes entire counties that are targeted for more community investment, and thus might allow some of these benefits or flexibilities. What about professions? I mentioned earlier certain professions or military history. There may be additional benefits. So here are some of the most common professions for which we sometimes see unique programs or unique benefits for a program for those in one of these fields. Educators, and that doesn't always mean just K-12 teachers. That can mean faculty and staff, employees of a school district or county school board or whatnot, law enforcement. And again, that doesn't always just mean the officer on the street. Sometimes that can be other staff within the law enforcement agencies, firefighters, first responders, EMTs, healthcare workers, municipal employees. Those are just some of the most common professions for which there may be additional programs at some times and in some markets. It depends, but we track this as it changes over time. But just like in targeted areas, you may see some unique benefits for those in these professions if and when those programs are available. Likewise, with those who have served or currently serve in the military, you will often see that even if the general public is subject to a first-time homebuyer requirement, those with military service may not be. You can also combine down payment assistance programs with VA loans. Not all the time, but a lot of them can be used with the VA loan. That offers both equity in the property as well as potentially covering closing costs, even for a zero down VA loan for a qualified veteran. That's a wonderful benefit for those who have served. I'll give you an example of a great program for veterans worth looking into if you do business with veterans or you're in a market where there's a base or a large military audience. The PenFed Foundation Dream Makers Grant is a 2-to-1 match from the foundation arm of the Pentagon Federal Credit Union. They will match the veteran's contribution 2-to-1 up to a $5,000 match. It is a grant at closing. Now, they do have income and purchase price limits. And for their program, the veteran does actually have to be a first-time home buyer. And I keep saying veteran, they actually open that up to active duty, reserve, and guard as well. But it's a great example of a way to add value to active duty or military service members or veterans and their families and households. Now, how can you access all of this information? That's a lot to absorb, right? There are 90 some programs in New York. They're all very different. They all have income limits and purchase prices. Do they require home buyer education? Yes, that's a lot to track, and we do that for you. So the first way, and I'm going to actually navigate this website here live in a moment. The first way you can access this information is to go to member perks in your NYSAR website. So I'm actually going to do that. I'm going to hop out of the slides here. Let's just go to your New York State Association of Realtors website. We've gone to member perks here across the top, and one of those perks is down payment resource. So all of this is already available to you. You just go to this website and you can do a search here at any time. We are tracking the change to all of these programs over time. So what you're seeing is current and up to date based on our effort to monitor these programs with the nonprofits and housing agencies themselves. So as you scroll down, you can see we're talking about down payment, closing cost help, tax credits, everything we mentioned on this webinar today, right? So what is down payment resource? There's some information there. There's a link to our website. We offer reports. We have a quarterly homeownership program index that measures the availability and characteristics of all these programs, breaks it down a number of ways each quarter. We also have other reports that may be of interest if you want some more background or education or insight about first-time home buyers, down payment assistance programs, and trends related to them. We also have a link to marketing resources where you can get customizable flyers and graphics and video tutorials and more to help you market to first-time home buyers and meet them with information about the down payment obstacle that's in their way. Most importantly, however, is this down payment search. You can search anywhere in the state of New York. So I'm going to start here with a search in Albany. And just without entering anything else, there are 13 programs. And you know what? I'm just going to go straight to them. I'm not going to enter any other information here. I'm just going to say, show me the 13 programs in Albany. So I can scroll through the list here. Your state housing finance agency will show up first because their programs are statewide. You also see this learn more button as I go. I get a basic overview of the program name, how many dollars my client might get from that program, and some bullet points. Like in this case, you don't have to be a first time home buyer, 1 to 4 unit properties, including co ops, condos, and manufactured, up to $15,000. But there's more to it, right? And if you want to learn more, if you need access to more resources, let me show you what you get when you click on learn more. Who are the participating lenders? That's one of the most common questions we get from real estate agents that are looking at how to work with these DPA programs or work with clients who want or need them. So you have a link to the program provider's website and their published list of participating lenders. That is a great place to go to find a loan officer to partner with that works with these programs. Many agencies also publish a list of their top producing loan officers, and those are the ones that know it best. And they are a great way to go build a relationship with a loan officer who works with first-time home buyers, works with down payment assistance, wants that business, builds their business, with these programs and with these buyers and with the kinds of referral partners that bring them to them. You also get information about homebuyer education requirements. Are there any requirements? If so, what are they? Where do you go to take the course and so forth? We provide links to program guidelines and flyers. Again, all of these are on the program provider's website. You also get their contact information. And this is for any program, right? We'll give you the max purchase price. Where is the program available? What are the income limits? Are there any other interesting notes or facts about the program? Is it deferred or forgivable in the loan term? Or is it a grant? So here you can say, over 10 years, this particular program is forgiven. So if they maintain, primary residence, then after 10 years, the whole down payment assistance program is forgiven. All right, and then that's just for that program. All of that information is available for every program. Once you move through the states, then you start to see other local and nonprofit and community programs. And again, you can click learn more. You can see all that same information about homebuyer education, flyers, guidelines, the providing agency, their participating lenders. And that was just one search in Albany without accounting for anything else. Let me switch gears here. Let's do a search in Syracuse. This time, let's say I've got a client and I know they probably want to buy around the $450,000 range. So let's plug in a purchase price. Well, that exceeded the purchase price limits of a lot of those programs, but there are still some available. What about 350? Well, we're up to 6 programs. What about 300? We're up to 8 programs. What if I just take it out and I want to see everything available in Syracuse? That's fine too. The only thing you have to enter here for this tool to do useful work for you is a location. Everything else you enter is simply refining the results based on your educational approach or a specific client's household characteristics or needs. For example, if you want to go to the second tab here and enter household information, let's say you're interviewing a client, you've got a meeting set up with them, they're a household of 4 and they make $97,000. Well, that exceeded the income limits of some of those programs, but there are still some available, and we'll show you which ones are still left. If that income were instead, let's say $65,000, well, now there are 12 programs. Take it out. Let's just see everything. What if you have a client that currently owns a home? So they're definitely not a first-time home buyer. Well, in this particular search, there are no additional programs. What if they owned within the last 3 years? Okay, well, now there are 6 that can't currently own, but if they did within the last 3 years, there still may be a few programs. Now, what if they have never owned a home? We're back to 15. What if they're a veteran? There's 5 more. What if we go to special circumstances, anything for teachers? There's 1 more, and so on. So you see how the form works. At any point, you can click view programs as long as you've entered a location, and we'll show you the results. And again, go on down the list. You can click learn more from any program. You can see who those participating lenders are. You can see where you go to meet the homebuyer education requirements. You're going to see a list of programs that is specific to the geography where you did your search and accounts for any of those other variables that you optionally entered. You see here a nonprofit. They've got some interesting programs as well. If we go on down the list, we're seeing there's PenFed. I just mentioned that 2-to-1 grant, 2-to-1 match for up to a $5,000 grant. You want to learn more? Here are the website links. Any lender can participate in that program, as a matter of fact. And there are all the links to different guidelines, overviews. If you want to call the agency and ask questions, there you go. You've got contact information. So that is our down payment resource tool. And again, to get to that, NYSAR.com, log in, go to member perks, and then go down to down payment resource. And all of this information is already there. This is the crux of our partnership with the New York State Association of Realtors. We provide additional reports, marketing support, and this widget to allow you to search anywhere in New York. We've done Albany, we've done Syracuse. Why don't I go to a different part of the state, say Long Island? Okay, there's 18 programs. Let's take a look. We're going to have Sony May. And if we, whoops, sorry about that. We're going to have Sony May. And if we go on down the list, we'll see, let's look at some local programs. Got a veteran program, PenFed, Federal Home Loan Bank. You never know. And that's sort of the point, and one of the goals of the tools is that you don't know what's going to be available until you go take a look. But we're going to layer in everything, all of the state, county, city, regional, local, nonprofit, and other programs. So you have everything at your disposal when the opportunity arises to bring this up in conversation with a prospective client. So with that, we were talking about ways to access this information. Whoopsie, I'm sorry about that. Let me go back to that slide. And one other way for you to access this information is through Down Payment Connect. If you're interested in that tool, you can go to downpaymentresource.com/DPC. That is another way to extend your reach, to engage and to educate more and new buyers, to provide them with a down payment search experience that leads them to compelling information. For example, are there programs? If so, how many and how many dollars might I get? But it also is a lead generator for you that allows you to connect with those consumers as they're doing that down payment search. They come to you and you only, and directly to you. You can enhance your web, your email, and your social media marketing with a down payment assistance search experience that drives that consumer to you and enhances your marketing efforts. You can learn more about that at downpaymentresource.com/DPC. And we have entire webinars dedicated to best practices there, looking at what your peers are doing with that tool. We would also encourage you to at least listen in, if not join in the conversation and the dialogue with over 7,000 of your peers around the country in our Down Payment Insiders Facebook group. That is another way to get information about DPA programs, how to work with them, partnering with loan officers, meeting challenges with solutions, how to market creatively, educational efforts, and all these other things that realtors around the country are doing and building and coming up with in order to assist first-time home buyers, to build a purchase pipeline, to grow the pie of possible home buyers, and to meet the challenges of the down payment obstacle. So we would encourage you to check that out as well. You can just listen in and watch, or you can engage in the dialogue and be an active part of that Down Payment Insiders group. I'll leave you with this. We know that right now renters want to leverage low interest rates. We know that any first-time home buyer will always need help understanding the mortgage process, but increasingly they're willing to adopt technology. However, they need to overcome misperceptions about down payment requirements. We also need to keep in mind that we're in a tight market with limited inventory and fast-moving sales and multiple offers. So we need to help these buyers prepare. That doesn't mean that they can't compete. It means we need to prepare them to compete before we sign the contract. We have another webinar dedicated to that. That's coming up soon. But we also need to appreciate some of the realities that renters face. Many of them now are leveraging credit and have had to do so to get through the last year. However, conversely, some of them have been saving a lot more money working remotely. Do they think they need 20% down? If so, let's get the message in front of them that they don't. And maybe now's the time to stop renewing leases and start looking at a home to buy. Some may be rebuilding employment history, and we're going to need to be able to work with them in that regard and work with our loan officer partners to do so. Some may be dealing with income instability as they rebuild employment history. Some may be making career changes because of COVID. And nonetheless, as I just mentioned, regardless of all of those challenges, they're going to have to navigate a rapid market with limited inventory. So we're going to have to look at inventory solutions. What has been on the market 2, 3, 4, 5 weeks? Maybe there's something out there that needs a little bit of rehab, or it could be a bit of a fixer upper. I'm not talking hole in the roof, but if it didn't get swept off the market in the first couple of weeks, there's always a bit of inventory there that maybe a first-time home buyer could look at and compete on. So those are some of the renter perceptions and realities. Wanted to leave you with that, and then leave time here for Q&A. So I hope that was helpful as just a broad overview of down payment assistance, some of the things that first-time homebuyers are facing, but also some confidence and some tools for you to specifically educate yourself or confidently bring up the topic of down payment assistance with more buyers. If you ever have questions for us, you can reach us at info@downpaymentresource.com. And again, thank you to the NYSAR crew. And you can always leverage our partnership with the New York State Association of Realtors through your member perks using the down payment resource tool. The link is here. That's everything I showed you on the website. And that's your path to all the programs and their details and requirements that are available anywhere in the state of New York at any time. And we monitor those programs for you. So with that, I'm going to ask Melinda and Fern in the background here if we've got any questions that we can answer.
Hey, Sean. Yeah, thank you so much. This has been a great group, really interactive. We've had lots of good questions. I just want to remind everyone really quick, because a lot of people have asked, we are recording this session and we'll definitely be sending that out as a follow-up. So if you missed anything or you came in late, don't worry, we're going to send the recording to everyone probably sometime tomorrow. And then Sean, Dennis had a really good question in the Q&A currently. Do most of these programs allow normal 60-day or less closings?
That does depend on the program. However, so a couple of answers, Dennis. The best way to figure that out is to talk to your loan officer, because there are a lot of, we actually just had a webinar earlier today that was kind of nationwide. We're focused on you guys in New York with this one, but we just finished a webinar and a similar question came up. There are a lot of things that can delay a closing, any closing. Forget DPAs for a moment. An appraisal could go bad. An inspection could bring something up that nobody anticipated. And I won't go any further into that list. When it comes to a down payment assistance program, there are a small few things that can prevent any delays. Yes, most programs can be done within a standard, market normal time frame. The things that delay that are the homebuyer education class was not completed up front. And by the way, there's no reason to wait. Buyers that are thinking about buying, in November, they could be doing that right now. And another thing is cash to close was not thoroughly reviewed, or something major changed along the way, or the down payment assistance program didn't come up until a contract was signed. But that's the kind of thing that should come up earlier on. That's what you and your loan officer should be working on before you sign a contract, to make sure that, okay, if we're going to use a down payment assistance program, let's spend the extra time up front, however long that might take, a couple days, maybe a week, to get them through the homebuyer ed course, get them pre-qualified, identify the right down payment assistance program, start that application, and have all that done before a contract gets signed. So then everything can fall in place within the normal timelines. And that's a quick answer. There's a lot more to that. And we have entire webinars that we're coming up with soon that are going to address that in a lot more detail, but I hope that helps for now.
Thanks, Sean. Another question that we've gotten a couple of times, and Eric is actually asking right now, is how to find loan officers that participate in DPAs, and then also how to kind of combat loan officers that don't want to do down payment programs.
I think the answer to the second question is to fix the first one. If a loan officer doesn't want to do DPA, then, maybe they get your luxury business. I don't know. That's up to you. But um, one of the best ways, so here are three ways at least to find loan officers that offer these down payment programs. The first is to log into your NYSAR.com member perks site, go to down payment resource, do a search in your area, pick any program, and look at their published list of participating lenders. We just did a demo of that. You can go do that for any program, anytime, anywhere in New York. I would also take that a step further and say, start with the state of New York Housing Finance Agency, Sony May. Go to their website, see who their participating lenders are, and look for top producer lists. Those are the loan officers that are actually doing a lot of these programs. They're closing them, they're getting them done. They're working with their realtor partners to get that contract won and to get it to closing on time within the reasonable time frame or the disclaimers in the contract and whatnot. They also know, the nuances. There are some nuances in New York that don't exist elsewhere, co-ops and things like that. They know those nuances. And then another way is, have a conversation with some of your existing loan officer partners. Maybe not all of them want to or can or will offer down payment assistance programs. I think, to be candid, that's just not the loan officer that's going to help you with those kinds of buyers, unless they want to change their mind. You could spend time changing their mind or spend time developing a relationship with somebody who will take that business and will help you craft that strategy. But I would have that conversation with a few of your loan officer partners, because here's another thing we hear. Maybe it just hasn't come up. Maybe they offer these programs, but you never brought them a client for whom it was relevant, or because you never asked, they never answered, and so the topic never arose. Maybe you've got loan officer partners that you've dealt with a little bit or just started dealing with, and maybe it was a loan officer that a client brought to the table when they came to you. Maybe that person does down payment assistance programs. So I would explore some of those relationships, but you certainly have data available to you through down payment resource as a NYSAR member, and you certainly have data available to you on Sony May's website, for example. I guess lastly, if you're a Down Payment Connect subscriber, if you're going to use that tool, every time you get a lead, you get information about who the participating lenders are for the programs that consumer found at that point. So that should be enough to certainly help you dig up a few contacts. If not, our contact info is up here on the screen. We can try to help you more, but those are the best routes to finding a loan officer who knows the programs, believes in them, utilizes them, and can help you set expectations and meet with success using DPA.
Thanks, Sean. Rachel had another, what I thought was a great question. Do you have to indicate these grants will be used on your offers when you submit them to a listing agent?
So that varies by state at the very least. It also could vary by program or program type. Just to clarify the question, not all DPAs are grants. The ones that are, I can't answer that from a legal perspective for New York contract law, but in some states you can disclose a DPA as a gift or grant because in a way it is. It depends on your state law. Sometimes people do that in the not addendums, and I'm sorry guys, my background is finance, not the real estate side, but in addendums or riders, sometimes you have to disclose financing or sources of funds. Every state is different. I would ask a real estate agent maybe that's done a few transactions like this what their best practice is. And actually, another place for a great answer is to talk to the DPA provider, especially at Sony May. I mean, they're definitely interested in you using their programs and expanding awareness to consumers. So they probably have some great recommendations as far as best practice for disclosing, when required, a DPA on a purchase contract. Sorry, that's probably not the most helpful answer, but it's the best I have at the moment.
It was better than the answer I gave. Thanks, Sean.
Okay.
Janae wants to know, can a vet purchase with VA benefits if a co-borrower recently sold a home?
So that's probably a question about first-time homebuyer status. That depends. I mean, as far as DPA, that depends on the program. I mean, if the program doesn't have a first-time homebuyer requirement, then that's sort of a moot point anyways. If that's about VA eligibility, I'm not an expert on VA loan eligibility, but that sounds like a scenario where the vet might still be eligible. So I'm not sure that co-borrower's recent sale, you said sale of a home, right? Not purchase of a home, Mel?
Sorry, I was muted. Yes, sale of a home.
Yeah, so I don't know, maybe I'm missing the crux of the question, but if it's a first time homebuyer status question, I don't think that's relevant unless there's a DPA that requires that all buyers must be a first time buyer. Then that could potentially be an obstacle. I don't think it's an obstacle for VA loan eligibility in general for the veteran.
Sean, the last question I have that came up quite often and kind of leads into that, what you were just saying about that specific question is, are all programs, let me try that one more time. Do you have to be a first-time home buyer for all of the programs?
No, not at all. And we quantified that earlier. About 40% of all DPA programs have no first-time homebuyer requirement, which means that, okay, for 60% of these programs, there is a first-time homebuyer requirement. But then remember a couple of other things. One, what is the definition of a first-time homebuyer? You haven't owned in the last 3 years. Two, what about targeted areas, military service, certain professions? Those are additional scenarios where if there otherwise was a first-time homebuyer requirement, it could be waived. So there are plenty of opportunities for repeat buyers to leverage down payment assistance programs. It's going to vary by program. And again, this is where these loan officer partnerships are so important. You have access to all this data and all these answers through Down Payment Resource on the NYSAR website. That's where we navigated to member perks and did a demo earlier. But that loan officer partnership is also critical. And through Down Payment Resource, we give you the contact information for the agency that provides the program as well. So, if you just found one or two programs in your market and learned a little bit about them, you don't need to be an expert, but recognizing that if you aren't, there's a loan officer that is or can be, you've got your team built between you and you educating yourself just a little bit more, leveraging these tools and building a partnership with a loan officer that truly knows these programs, at least one or two in your market. That's your team. That's your strategy. That's your door to a bigger purchase pipeline. So Mel, Fern, any other questions we can address? Any common themes here?
No, I mean, I think you've answered all of mine, unless Fern has some.
No, I think you've definitely answered everything. This has been a great crowd. Lots of good questions here today.
Okay. Well, good deal. Thank you all for joining. We had a great crowd. Again, thank you to the New York State Association of Realtors staff for letting us put this on. You can log in, go to member perks and go to Down Payment Resource, and everything we looked at today is there for you. The reports, the tool to help you find down payment programs. If you're interested in Down Payment Connect, then here's the URL, and that can help you extend all of this capability to your marketing and incorporate a lead gen tool into your web and email and social marketing. So with that, thank you all. Have a wonderful day. We will get a recording out to you by tomorrow, and let us know if you have any questions.